Hey, it's Dave Knight from 123daytrade.com. Thanks for watching. Thanks for being here. I want to thank you for moving on and pressing the next step button. And now you're watching this particular presentation is on that 5-minute video that you just got finished watching. This is the nuts and bolts of it, and I call it the CL pit strategy. In other words, it's the crude oil power inventory trade strategy by myself, David M. Knight. I go by the name of Trade Craze at Top Step Trader, but my company name is 123daytrade.com. Anyway, let's move on. Now, the CL pit strategy is a day trading strategy, basically, that simply works. And why? We're after a profit target of a 3P against a stop loss no greater than 1R. Now, Van Tharp describes what he would call R multiples, or how much are you willing to risk in any given trade. Now, let me tell you that I'm never willing to risk any more than 20 ticks in any trade that I put on the crude oil market. So 1R for me is defined as 20 ticks. But most of my trades that I put on, I'm at 1/2 R. You'll hear me talk about 1/2 R or 2/3 R. That's what that's standing for. It depends upon, there's another calculation, but let's just go and let's keep it simple right now. And 1R is defined as 20 ticks. 1/2 R is defined as 10 ticks. Now we're basically looking for a 3-to-1 profit against the loss. It's a 1-day-a-week trade. You're going to know the day and the time of the week to make this trade. You're going to use volume and price action. And as Nike says, let's just do it. So here is a trading example taken from a different day. And you notice that, well, the crude oil market's been roughly around this 47 to 45 range for a while. The long entry here was 45.14. And you notice that the 1R stop loss of 44.94 was not run. Now that's 20 ticks from entry. And if you look at the 1 minute period of time that we're making our decision, what we take here is this right here is our volume decision bar. This is telling us that red for us means to buy in this very simple basic way of looking at it. We are a red bar we're buying, a blue bar we're selling. And it's got to be high. It's got to be a big volume bar, like a skyscraper that just kind of screams at you. So what we want to do is get involved. Now, the better way of taking this trade on, instead of coming in here at 55.14 on the first time it crosses over the 200 bar, since I understand this trading strategy a little bit better over a year being and doing this for about 2 years of my life now, I would tell you that you want to get involved the second time that it crosses over the 200 bar. And this blue line crossing over here is your 200 bar simple moving average on a closing basis. Now, 1P, that's your initial target before you move to break even in a very simplistic basis. But your decision time is right in here. You're making a decision which way you're going to bracket off the market, and you're just basically going to go with the flow. You're going to let the market take you into the trade, and you're going to run with it. So this is the conclusion of this trade. Now, I showed you a trade that earned 84 ticks. If you look at that 84 ticks on the presentation that we did on the video prior to this, 84 ticks is $840. Now, every cent that the crude oil market moves is worth $10. So when you see something like $50 a barrel in crude oil and it says $50.01, well, that's a $10 move. If the market moves from $50 a barrel to $51 a barrel, that's a $1,000 move. Okay, so 84 ticks. I like to think in the market in ticks. And by the way, that is a really good concept that you need to get a hold of. And this is just extra added benefit for you. You know, the quicker that you can divorce yourself from thinking of the market in terms of dollars and cents, and you can divorce yourself from that and think in terms of ticks. So in other words, try to think of it in you'll see me in my post. I say I made 55 ticks, and like this trade here, it made 58 ticks. I obviously know it means $580, but if you can trick your mind into thinking ticks, as opposed to dollars, it helps in the long run because you don't get so fearful and so scared in the market. I mean, obviously, if you're down 100 ticks, I mean, you've got to know where your limit is. I mean, if $1,000 is your limit, if 500 is your limit, whatever your limit is, that's what you got to have that trading plan. That's another discussion all in itself. But anyway, so the conclusion of this trade, if you, the 3P profit target, which was run, and you can notice that this particular trade, it's about 10:15. You came in at 9:30 a.m., or excuse me, 9:31, 9:32, and 10:15. So you're looking at about what, 45 minutes of trading, and you made $580 for every contract that you put on. Now, if you had 5 contracts trading in this, you made $2,900. And if you're fortunate enough to work your way up to 10 contracts, this particular trade was worth $5,800. Now, the other side of that is if you're risking $200 a contract, let's say, okay, so 580 versus a $200 loss. It's very, very close to 3-to-1. And so that's usually what you're after. You're after that 3-to-1 target. In like 10 contracts right there, you would be risking $2,000 against the gain of $5,800. And you can see I marked the volume warning bar here to let you know that I thought this is usually an announcement that maybe the movement is done going up or down, depending upon which way you're making a trade. The blue bar volume is announcing, hey, wait a minute, this might be over. So, in summary, when I wrap this up, the CL pitch strategy is a 1-day-a-week trading strategy. You're going to know the day of the week to get involved in it. You're going to know the time of the day to get involved in it. You will know your profit target before you place the trade on. You're always going after a 3P target. You know your risk amount, 1R, no greater than 1R. More times than not, you're at either 1/2 R or 2/3 R. Here that could be 10 ticks, 12 ticks, but it's never greater than 20 ticks in the crude oil futures market. You know your trade entry point ahead of time. You know your trade exit point 1 hour or less a week to make on this trade, to take this trade on. So you know the day of the week. You're in it, you're out of it, and you're moving on. And if I had only 1 day a week to trade, this is the day I would trade. I would trade the inventory day, and I would just take 1 day out of the week, and that would be it. Because that's how powerful this trading strategy is. It's part of a full trading strategy that you will earn while you learn, and there's obviously a free members area to set you up, and so much more that I'd like to talk to you a little bit further about. But what I want to do is just get your appetite whetted a little bit right now. That's the goal here, is to let you see that and get you making money in the futures market. This is not a difficult business. We make it difficult with our emotions, with a lot of stuff that we bring into the market. But if we just follow a simple system and a simple strategy, you can turn your account from red or from being a losing trader and put yourself into the winner's circle more often. All right. This is Dave Knight here from 123daytrade.com. I thank you for watching today. God bless, take care, and I'll see you on the next video.